that has been the majority of my education. Right, I went to college, I went to university. When I got out, I learned there what what was being done, not what is supposed to be done or what should be done. And I'm going to give credit to these associations for most of the education, because honestly, I got my education from the speakers, the seminars, the grazing conferences, all those things that come in. That's where I learn best, right? I don't do well reading books. I don't do well sitting in a classroom. But when there's a speaker up there and they give me the highlights and I really get excited about something, then I'll go investigate it or dig into it or go talk to them more. And honestly, in 20 years, that's where I've got my education from. It's the conferences and seminars, and most of that in Alberta is by these groups. So if you're not in Alberta, there are other groups like that. There's watershed groups or environmental groups of some kind. They're usually not-for-profit organizations that can bring in speakers, and that is where you get the real education from. Very passionate about that. So thank you very much to PCBFA for all that you guys do. Okay, I'm going to share my screen. Let me know if it works. All right, is it working?
Looks good.
All right. So yesterday we talked about economics, and I did a little bit of a description between economics and finances. So I'll do it real quick here. But before we get into that, I did touch quite a bit yesterday on kind of my basic philosophy that I didn't explain at the beginning. I normally get into that in a presentation, but yesterday I didn't. So I want to explain to you my basic business philosophy at the start of this one. So most people, when they come to a seminar or a conference, they're looking for production practices, right? They love to learn how to graze. They love to learn how to, calve cows and drive tractors and build fence and bale graze and all those things, right? Those are sexy. Everybody loves those. That's what they come for. But those are just production practices. And I want to make it clear right off the bat that the production practices that I do on my farm are the least important part of my business. Okay, let me repeat that. They're the least important part. So whether I'm bale grazing or swath grazing or feeding cows in the winter, right, those don't matter as much. It's the reason, that's the outcome. We have to figure out why we're going to do those different production practices. Okay, so we've got to pass a couple of tests on my farm, right? So which production practices I do this year, right? It could change from year to year. One year I might be swath grazing, one year I might be bale grazing, one year I might be dormant season grazing or crop residue grazing, because the economics change and the market value changes all the time. So it's got to pass a couple of tests for me. So which production practice I use, I have to run them through my economics and my finance. Okay, so we looked at a gross margin yesterday, and we have to figure out is this production practice profitable in this situation, in this year now? And then we look at finances. Okay, can I cash flow it? Can we make this work? Right, those are two different sets of books. And I've got to make sure that they, both those tests, because as I said yesterday, a banker will encourage you to get a loan or to do a production practice that you can finance that's economically unsound. And there's times when, I can have something that's economical, but I just have trouble cash flowing it. I remember years ago, I went in for a beginner farmer loan, and just green out as grass coming out, and this beginner farmer loan was up. It was a good interest rate. I went out to try and get it, and went into the banker. We were going to try and buy a piece of land right across from the land that we already owned, and it was a really good deal, like right outside the living room window, and really wanted to get it. And the banker looked at numbers and looked at everything and basically said, no, you can't finance this. You need a better off-farm job, basically is what he said to me. And at the same time, he turned around and said, but I can get you a loan for 100 bred heifers. You can buy bred heifers. And this was back in 2001, just to give a relation to when it was. 2001 was kind of the top, almost at the top of the cattle cycle at the time. The prices were pretty good for the day. I didn't understand why he was pushing bred heifers on me, right? This banker was, I didn't come in to buy bred heifers, but everybody else was buying bred heifers. And because the value of them were high, he had plenty of security, and he would gladly give me a loan for that because he could just take the heifers if we didn't pay our bills, right? He had the security. But if I would have bought heifers in 2001, right? 2002 hit was our severe drought. 2003 hit was our BSE, where the markets crashed, right? I would have been destroyed. So it frustrated me that he was trying to force me into buying something that was economically a bad decision, but because I could finance it. So we ended up going through another bank. I got the loan for the land. Yes, it was a tight cash flow, but I had already had plans to buy that land, get control of it, and then resell it to an investor. And a year and a half later, I resold it to that investor, made 20 grand on it, and I still rent that or lease that land from the investor today. So I still have control of that land. So I made sure that it was an economical choice first, and then figured out how to finance it. Okay, so 2 different sets of books. We got to be running them both. Now, not everything's about money. Okay, there are other reasons why we might make decisions. So this is kind of my decision framework here. I can have something that's economical and I can finance it, but I still might not do it because there's one thing that has veto power over both these, and that's human resources. Okay, human resources can, that's a big picture. It could be labor components. It could be it doesn't match our goals. It could be anything like that. A couple of examples would be our mission statement at Greener Pastures is economic and environmental sustainability for generations. Okay, so we have to be economical. We got to make some money. We have to be environmental, and it's got to last for generations. Okay, doesn't say I have to own cows. Doesn't say I have to own goats or even be in farming. That gives me my goal. That gives me my direction. So if there's a profit center that comes up that isn't going to be environmental for generations, I don't do it, right? I mean, lots of people tell me, why don't you rip up your land and plant canola? Because you could make a lot of money at that. Because my land, I wouldn't need any fertilizer because I know I've built that land up so well. But that is not environmentally sustainable for generations, right? That's against my mission statement, so I won't do it. Another example of that was years ago, there was a fella that came to me. I got known as the goat guy. Don't ask me why I was known as the goat guy. I only had like 7 goats. But when you do presentations and you put pictures of cute baby goats on your screen, everybody loves them, right? So you end up being called the goat guy. Anyway, so I didn't know very much about goats. I still don't. But all of a sudden, this guy came to me one year and he said, Steve, I want to partner with you. I want to buy 1,000 goats. I'm like, whoa, that's a big step, 1,000 goats. What was happening was in British Columbia at the time, they were trying to move away from chemical use in the forests, and they wanted to clear cut lines, so power lines and cut lines that go across the mountaintops. They wanted to clear them instead of with chemicals. They wanted to try using biological, so herds of goats to graze down all the shrubs. And they were paying people, I don't know if it's still happening, but they were at the time, $1.25 per goat per day. Okay, so it's not that I'm going out renting land, it's that they're paying me to be there. Plus I get to sell the kids, right? The goat herd, right? Like, wow, that's a pretty good deal. So we did the numbers. The economics was amazing, right? We could make some really good money on this. Finances was awesome. We could get a loan and have it paid off in 1 year. And then, then the goats are paid off. Like, it was a phenomenal deal. Why didn't we do it? The main reason was in Alberta at the time, the oil field was booming. We had huge populations coming in to work in the oil field. You couldn't find labor, right? We were importing people just to get, to have enough people to do jobs. I remember going into town that day or one day, and the local restaurant, I think it was KFC, there was a sign on the door, closed due to labor shortage, right? You couldn't even get lunch. It's like, what? That's crazy. So if I had to put an ad in the paper for 3 goat herders to go to northern BC and chase goats around, how many do you think I'd get? Okay, and if I did get someone, what do you think their quality would be? Right? It was pretty tough to find good help. And I'm, my business was here, my family was here. I'm not about to, run off to the northern BC for the summer and chase goats around the mountainside. So I didn't want to do it. So I chose not to do it because of human resources. Okay, economics was there, finances was there, but human resources has veto power. Okay, so that's our basic business philosophy. The production practice is the least important part. We have to make sure whichever one we're using is economical and we can finance it, and it has to pass our human resource test too, right? Whether it's our goals and direction we're heading in, or even labor components. So that's the basics of it. So again, two different sets of numbers. I explained that yesterday for anybody that wasn't here. Economics is profitability. We do that with a gross margin analysis, which we went through yesterday. And then finances, there's a bigger part of finances that we're going to look at quickly today, but the part that I look at is cash flow, and we're gonna look at that. So, all right. So basics of accounting. I'm not an accountant. I will tell you right now, I'm not an expert at this. When I need something done, I hire it out. Okay, but I kind of got the basics behind me, but that's not my thing. I love it when I get someone else to do stuff I don't like. Joel Salatin states in our school we do is that if there's a job on the farm that you don't like to do, there's probably somebody really close by that would just love to do that job, right? That's what gets them out of bed in the morning. And they could be in your same household. So a lot of times I've found that it's more efficient and more effective and better to hire out something that I don't like to do, because I'm not going to do a very good job at it. And it usually gets done quicker and better and with more passion, because I'm not much at that. So let's look at the three pillars to finances. Number one is a balance sheet. It's a snapshot in time of your business's financial situation, right? Our balance sheet is pretty well what we own versus what we owe. The income statement, I'm going to go through these in more detail, but just the basics first. Income statement, it's a measurement of profit over a period of time. Okay, could be quarterly, could be annually. And your cash flow, this is your running flow of funds through your business, basically what your bank account's doing. And like I said, if you don't like finances, hire somebody. So my accountant does my basic accounting. Of course, I've got a firm that works with me. But also if I have to go get a loan or I'm doing something else and I need more than what I get from my accountant, I have a financial advisor that I hire. And now he's been working with me for many years. I don't use him all the time. Like every few years, I call him up and send him some numbers and he sends me back a report or whatever I need. It started years ago with that beginner farmer program. They had this funding available where a young farmer could get a financial consultant to come out. I think it was like $2,000 worth of consulting for, I don't know, $100 or something. It was quite a deal back then. But that got me in the door, and he worked with us for a couple of years, and I learned a lot about, you know, what we need to manage to look good and what we need to manage to actually be good. There's a difference between that. And yeah, every once in a while now when I need something, a printout for a loan, right? You got to go to the banker. It's so much better if you can walk into a banker with all your numbers done, right? That's what most businesses do. Farmers usually walk into the banker and say, this is what I need. And then the banker has to do all the work and, you know, input all your numbers and things like that. So it's nice to be able to have that in place. You can walk into your banker and tell them what your debt servicing ratio is. They're pretty impressed. We're going to go through that. I didn't know what it was either. Don't worry about it. So let's look at it a little closer. A balance sheet. This is a snapshot in time of your business's financial situation. So basically your equity is your assets minus your liabilities. So what you own minus what you owe. Basics to all accounting. Now, a couple of different ways of doing that: your book value or your market value. Book value is what's, you know, what would be on your balance sheet as of today. Market value is if you sold it. So if you were to sell everything, what would the investors take out of that? So usually the market value is a little bit higher, but just so you know, there's two different ways. So that's all your inventories, accounts receivable minus your accounts payable, and your expenses there. We also value the liabilities, principal, accrued interest, arrears, all that gets added in. Equipment leases get thrown in there. So we're showing all those things on our balance sheet. And your income statement, measured of profit over time. Now your revenues minus your costs is your net income, usually annual, quarterly, or monthly. Now, profitability is actually measured by an accrual income statement. That is your cash and your non-cash stuff. Okay, so a regular income statement might just be your cash, but that could be, so in your revenues, that non-cash could be things that you haven't sold. Maybe you're increasing your inventory. A good example is you raised 100 calves, right? So you got 50 steers and 50 heifers. You sold the steers and you sold a bunch of the heifers, but you kept 10 heifers as replacements. So we want to make sure we value those 10 heifers that you didn't actually get cash for it, but you have a value there because they're, you know, in the pen getting fed. So we got to make sure we account for those non-cash revenues as well. And non-cash costs, same thing, increased payables. Here we also include depreciation. Most accountants throw in depreciation there, probably not as much as I put in on our gross margin, but it is a good idea to have it on here. And unpaid labor, right? That's one of the things we talked about yesterday too. I despise the term unpaid labor. All your labor should be accounted for in your books, but they want to bring that up in this as well. Cash flow, third pillar, cash in and cash out. Now this can be from a lot of different places. We're gonna, you know, add these into our cash flow here later. From capital transactions. So if you're buying equipment, selling equipment, land, whatever it is, you want to include that in there. From financing, if you're going to get a loan, well, that goes into your cash flow, right? That money comes in when it's got to get paid back, and at what amount. And this is one that some people don't always throw into their cash flow. If you are a limited company or a corporation, you're two separate entities, and they refer to it as contributions and withdrawals. Now, if you're just a sole proprietor and you're running your farm business through your regular personal bank accounts, right? You're just the farm, then you should still think this way, right? As a corporation, you're kind of forced to do it this way. But if you're on your own, you should still think this way. How much money is going into the farm or coming out? I talked yesterday about the off-farm job, and a lot of people criticized me when I first started because I had this off-farm job. But the issue is when the off-farm job is subsidizing the farm. Okay, if your household needs $50,000 to survive, and you go out and get an off-farm job for $70,000 because you got to put $20,000 in every year. Okay, that's subsidizing the farm. So that would be a contribution. And if you're continually doing that, you're subsidizing your farm. Now, to begin with, yes, we might have to put some money into it. But after 10 years, I'm hoping that now we can take some withdrawals out of it, right? Take more withdrawals out and take it as a shareholder's dividend instead. So my advice is, if you're not a corporation, have two bank accounts, right? One that's personal and one that's a business. And then you can actually move that money back and forth. Oh, this is a contribution, and then record that, let your accountant know, and vice versa, right? Then it's easier for them. But yeah, as a limited company myself, this automatically happens in my accounting. So the cash flow is the one part that I do. Okay, the other stuff, the balance sheet, the income statement, that's what my accountant does. Get a good accountant, they can run through that with you and figure that out. But I need to run my cash flow. The reason for that is I want to know what's going on in my bank account. And I don't want to be reactive. My advice to you is be proactive on your cash flow. So proactive would be figuring out that you've got a cash flow crunch 6 months in advance, and now you've got 6 months to try and figure it out, right? Oh, you know what? In April, I'm going to be broke. I'm going to have to work on that. Being reactive is when your wife's bank card gets declined at the grocery store, and now she's mad at you, and now you got to phone the banker and say, hey, what's wrong with the account? We're overdrawn. And now you're begging your banker to help you out. Bankers don't really enjoy that very much, right? They would much rather work with someone who's proactive. So by proactive, let me tell you a story. Years ago, we went in, I had to talk to my banker because I got offered a piece of land. So it was a half section of land. The guy came to me in December or November, something like that. And he said, Steve, if you want to rent my land, you can, because the previous renter didn't pay him. So kind of screwed him out of the rent. And so he's not very trusting, this fellow, but it's a half section. It was touching my land already. It was a good producing piece of land. I've been watching it for a few years, and this was a heck of a deal. But he said, I need the money in advance. The last guy, I told him he could pay me in September, and he didn't pay me. And now I got no recourse. I can't go get the money. So if you want the land, you have to pay me in April, because I want to make sure I get paid. So as a custom grazer, right, especially years ago when I was first starting, April is always my brokest month, right? I don't have a lot of money in April because my income comes in the summertime, And my bank account might look good in the fall or early winter, and then it dwindles all winter unless I can find some other income somehow. So April's always tight for me. If I can make it to April, I'm set. So this guy all of a sudden wants this rent in April, and it was $5,000 he wanted for rent. And so I did my cash flow, worked it out, and I just couldn't make it work. That April was coming up in the red. So I did my cash flow, went to my banker, and we went right into her office, and I showed her the cash flow, and I said, so this is a really good deal, economically it'll be good, and I get my first paychecks in May, so it'll only be a month that I'll be short. Will you carry me, right? Will you allow me to go in below my zero, because I don't have an operating loan. Zero to me is zero. I don't want to be going in negatives. But for that 1 month, I asked her if she'd carry it. She goes, oh yeah, no problem. Sounds good. Great. So I made the deal with the landowner, shook his hand, said we'd pay him in April. So April came along. The one mistake I made was I should have phoned the banker, but I didn't because we'd already talked about it. So I wrote the check. Everything was good. All of a sudden, I got a phone call from my banker, and she said, your account's overdrawn by quite a bit. Right? Like this is a big check you just wrote. And I said, yeah, we talked about it. Remember back in November, we talked about this land, and I get my first check in May, we're going to be good. And she goes, oh yeah. And I can tell she's flipping through my file, right? When we're on the phone, but, and she says, I remember that now. Right. Yeah. And she's looking through it and she goes, wow, your bank account's within $100 of what you predicted. Right? Like that was a fluke. There's no way I could ever get that close, right? That was a fluke. But if I'm within $1,000, that's good. But because I was so close, that really impressed her. That 6 months in advance, I knew where my bank account was going to be. So that's what I mean by proactive. I had 6 months to plan it, organize it, try and adjust it and change it. So much better to be proactive on your cash flow. So we're going to look at the cash flow after our break or whatever a little bit, but we're going to run through one, and I'm going to show you how I can play with that and adjust things to manage my own cash flow, because I don't use an operating loan. I try and self-finance myself, but that might not be for everyone. If you use an operating loan, that's great, but just we'll show you that. All right. So I'm not a big fan of financing. I'll tell you right now. Some days when I got to sit down and do my cash flow, I sometimes drag my ass a little bit. I can't tell if anybody's laughing, but I hope so. And what happens, because I don't want to, I really don't want to do this. It's like pulling teeth for me. Sometimes it's because my wife's riding my ass to get it done. And then that doesn't usually go so well. So sometimes my ass wanders down to the neighbors, and then I got to go get my ass. I got to haul my ass home. Usually there was a phone call involved, says like, come get your ass. They're at our place. And then you know what happens? Well, I end up kissing my wife's ass all week, just trying to make up for it. So sorry, I had to keep those in. Nothing like a good ass joke. All right. So there's another part of finances that's important. This is more important for your banker. And this is something that does not excite me at all. But I've figured out that if I need to work with bankers, they are excited by it. So we need to understand what it is. So I went to my banker one time. I said, what's the most important number? What's the most important ratio that you need? And he said, oh, right away, debt servicing ratio. I said, what's that? Oh, he said, that's, it was totally over my head. So what it is, it shows the ability of your business to cover its liabilities. Okay, what it is, over greater than 1.5 is good. It's the debt servicing capacity divided by the debt servicing requirements. Okay, so what is that? Well, your debt servicing capacity is your net income plus your depreciation and interest added back on, plus or minus your contributions and withdrawals, divided by your principal and interest payments, right? I don't want to figure that out. That's where my financial advisor comes in. But if I could go to my banker and show them that my debt servicing capacity is over 1.5, they're usually quite impressed, right? If I can already have this all done and walk in there and show the numbers, that's a powerful statement if you're trying to get a loan, right? The bankers, you don't even have to know what you're doing, right? You can just look like you know what you're doing because you hired someone that does know what they're doing. So that's my trick, is I just hire someone smarter than me. Okay, so that's an important one. Liquidity, another one that a banker is looking for, measures the ability of a business to meet its short-term debt. This is something that we need to look at too. Current assets versus current liabilities. A banker likes to see greater than 1.5. So for every $1.50 of assets you have a dollar of current debt. Okay, so another important one. Solvency, your leverage ratio, total liabilities divided by your total equity. This one is less than 0.42 is a low risk for lending. So your banker is going to like you if you can be less than 0.42. Basically, they just want to have excess security. If you can't make your payments, what do you got so that we can take it from you? Measuring profitability is also what your accountant likes to see. Return on assets, net farm income divided by your total assets. So what you own. This is something that we're looking at in our gross margin as well. Doesn't compensate for the size of the operation, but it gives the relative measure of efficiency. And again, greater than 5% a banker is happy with. Yesterday, we talked about in our gross margin about return on assets, right? We were trying to cover our depreciation, our opportunity cost, and our inflation. I'm looking at, 20 to 23% is what I'm looking at on my farm. Most banks are happy at 5%. Okay, so remember I said yesterday that I set my bar pretty high because I love the mistake when I end up with more money in my pocket. Okay, so I set the bar pretty high. So a bank's happy at 5, I want, over 20. And measuring profitability, there's another term for it, is return on equity, similar to return on assets. This is more of a measurement if you, for a investor, right? They want to know what your total net farm income divided by your total equity is. Yeah, but not all the assets not owned by the bank. So it kind of takes out your everything that you've got on loan. Here they'd like to see it over 7%. So if anybody needs a screenshot, this might be the one to take. This is this came out of one of the programs that my financial advisor used. In the end, all these different ratios that the bankers look at, and what's good, what's caution, and what's a risk. So if you ended up going through a program, if you have an accounting software program that spits out some of these at the end of it, this is kind of a little chart to tell you if it's good or not. If it spits out that it's 1.3 debt servicing ratio, but you don't know what that means, is that good or is that bad? You might not want to go into the banker and show them if it's bad. You might want to play with it a little bit, maybe, I don't know. But yeah, I'll just leave it up for a moment in case someone was scrambling to figure out how to copy screen. All right, I went through that quicker than I normally have. I haven't done that one for a while. This was actually a little entertainment picture. Just I'll explain it a little bit. We had two donkeys, a male and a female, and the neighbor asked to borrow my male donkey. So I took him away, sent him over to breed their little miniature horse, and then there was just the mama donkey and the llama left in the pen, and the mama donkey had a baby. So there was a daddy llama and a mummy donkey and a baby donkey in the pen for like 2 months. So the llama figured that was his kid. And then later on, I brought dad back and I put them in separate pens. And that llama decided to defend his baby against the donkey and spit on him. How many times do you think he spit on him in that picture? Probably 20 times, 30 times. Anyway, yeah, that's how I feel sometimes when I'm doing finances, that I just kept getting spit on. Yeah. All right, what do we have for questions? Our chat was moving.
You had some pretty good reactions to your ass jokes, Steve. Not gonna lie.
Good. Oh, good. Ooh, I wasn't watching that. It's pretty hard to tell.
I don't think we have any questions in the chat thus far. Oh, right. Chris says, is it possible to get copies of your slides? Which, Chris, we are recording this and we will be sending out the recording afterwards. So you can watch that on YouTube early next week.
Yep. You can pause it and copy stuff down and all that good stuff.
Awesome. So who actually runs a cash flow right now currently? A couple people? Would it be easier to say who does or who doesn't? Probably who does. Very basic, yes. So the one that I will give you is a very simple one. I actually took it off the government website probably 20 years ago, and I adapted it, changed it because it didn't actually work. So it's a very simplified one. If you have a cash flow that you already work with your accountant through their program, great. I don't expect you to change and use something new, because this one's just a very basic Excel spreadsheet that just helps you run through it. But it can help manage your bank account, right? And look for those shortfalls down the future. It can link together your business account with your personal account as well. So no questions on that? Or you're just grateful that it's over? See, that's why the joke has to be in the middle there, because people start nodding off in finances. I almost nodded off during that. Come on, you had to have seen that. So yeah, the joke's in there just to wake you guys all up a little bit. Okay, I will share my screen again and we will look at the spreadsheet. Okay, so basically the cash flow, I got to get you guys out of my way so I can see the whole screen. There we go. So the top part of this is, oops, the cash in. Okay, right there is cash in. And then we go down to the bottom here. I'm going to kind of show you the whole thing first, then we'll zoom in. Our cash outflow is that part, which of course seems wrong. It's so much bigger. Why is cash outflow bigger than cash inflow? That's what stresses me out sometimes too. But, and then at the bottom is actually our running cash flow. Okay, that's what our bank account's doing. So that's the basic structure of it. That's simple. It's money in, money out. Now at the bottom here, we have a few different tabs. So if you understand Excel, this isn't that difficult. So we've got the business cash flow. So that's running my business account. I've got a personal tab, the exact same setup. It's just running my personal account because I have them connected. And then anything else that gets inputted on this chart, like one of these squares, that's more complicated than a couple of calculations, then I build a whole new page. Okay, because I don't want to have to redo, do most of my calculations on a piece of paper in a calculator and then input it in one square. So I can easily build those calculators on additional sheets at the bottom. So here we've got our rent, because obviously my rent is a very complicated thing, when it gets paid and who it gets paid to. I've got my grazing revenue as an entire worksheet, and it because the money comes in monthly, different owners, different number of animals. And this is all a projection, if you remember. So crop sales, right? If you're a crop guy selling hay or wheat or whatever, and if you're selling livestock, right? We've got pages. And if you have, you want to sell strawberries or chickens, you can build a page that will link right into this. So basically, if you look at this just for fun, here's this $140,000, or yeah, 140,000. It goes into the business page under income of crop sales of, where is it at? Oh, no, hold on a second. Crop sales, it was, no, cattle sales. That's why it's in two allotments. We sold some in August and some in December. So it's 124 and 16,000. So there is our, where are we at? Cattle sales, 124 and 16,000. So right there is where it came in. Okay, so you just have to make that formula. So this formula is from the cattle sales page M19. Simple as that. You type that in, and that's where it comes through. So we've got a number of different incomes and expenses going out here. So let's just start working on this. For me on my farm, we've got grazing revenue is a major one. So every month it changes. So we're not bringing very much in during these months, and then we kick into summer grazing and it kicks up, and then it kind of fades off again and we drop off. So that's why I explained to you earlier that April is my brokest month because May is when I get my first check starting to roll in again. We've got crop sales. In this one, we don't have any cattle sales. I put in that we sold some in August and some in December. Labor build out. There's underwater basket weaving. I make a lot of money at that. So that's important to put in there, right? Malfunctioning widgets, if anybody sells any of those. I make a good return on those. So just whatever else you guys are, businesses in, you can put whatever you want in here. This is all open, but it's just showing you when the money's coming in. Okay. Money going out. Now this, I usually start out in the beginning of the year with what my accountant did last year. Okay. So I might look at this and say, okay, machinery repairs, they were, look at my accountant books, it was $9,000. So I usually bump that up because chances are I'm going to be paying a little bit more this year than I did last year. So if it was $9,000 last year, I'll do 90, pick $800 and I'll just put it across. If I want to change that, let's say I said, oh, it's probably going to be more. Let's put it up to 900. I can type it in the first one. If you click on the very bottom corner, you can just drag that across and it copies them all, changes the numbers. So it's really easy to adjust and change. So I'll go through my accountant's numbers and I'll balance this out as best I can. If, let's say it's your fuel, and I know that I'm going to spend more fuel in May, June, July, August, September, October, because that's when I'm out driving around all the time, then I might adjust that. I'm pretty sure that's going to be in here where fuel and oil, 500, 500, 500, then I went up to 1500, 25, 25, right? So that's balanced off a little closer. It's an estimate, but I'm trying to get it as close as I can. And I'm going off last year's numbers. Okay, so you can do that with all these. In here, here's land rent. Okay, this is going to be a cost. And you can see right there, it changes every month. I don't have much land rent. We have a little bit in February. And then May, June, July, August, September, October are my main land rent times. So if we go back to my rent page, you can see where those numbers come from. I just taken out the landowners' names. Normally I would put their names in there, but and then their acres and then what the rent is. And when I pay it. So for example, this 3260, I paid $1,000 in advance in February. He wanted to just, secure that I was taking it. And then the balance I paid in June, right? This one, I made this payment in two allotments. This one was one. This one's at the end of the season. He's okay with it. End of the season. There's one that's double allotment. Okay, so I've got to figure out when this money's going out, and that all these numbers right here go back into my main business page. The reason we build this separately is because if I plan this out in January and all of a sudden I come around to May and maybe the landowner wants more rent, or maybe I lose the land, right? I can simply come in here and just delete this one out or add to it, or maybe I get another piece of land. I can add to it and it instantly changes my business page too. Okay, so that's the power of this, as I can just play with it here, and I don't have to mess with the business page because that all gets changed automatically. All right, we've also got one, management wages is connected here. So I put out whatever I'm going to pay myself. Here's $4,000 a month. It automatically gets linked to the personal page right here by a formula. So whatever I put in here or on the business page, we get paid in the personal page. Okay. So that one's linked. And then all your payments, right? Truck payments, loan payments, insurance, whatever's coming out, your guys' numbers are going to be different. But you're running through your actual statements, trying to get this as accurate as possible. And then this is where your meat and potatoes ends up being. Okay, so the first square is important, is right here. It's $15,000. So in this example, on January 1st, my bank account was at $15,000. Then the formulas keep adjusting. So my ending cash value, we had, let me just scoop up here a little bit. We had $1,571 coming in, so not a very good month. We had $7,422 going out, and we ended up with a negative $580.51 for the month, okay, which dropped my $15,000 down to $9,000. So, and then the next month we had a total cash in and total cash out. This is where we got a loan to buy some animals. So there's a loan. We had $150,000 come in. We also had $150,000 go out because we bought the animals. So that ends up being mute, but we now have the animals, and we ended up with a positive cash flow of $3,257. Okay, so now we bumped back up to 12, and so on. It keeps changing. So this number right here and this number are the same. That's where it carries over, and same as here and here, here to here, right? Those numbers are all the same. So what happens in my business usually is in April, we end up being tight. That's when we're going to have a crunch. And in this case, we're down $11. That's not bad. I can handle that. I can easily manage that. But this one, maybe $3,000 down. That might be a little tougher. I've got a plan for that. So somewhere I need to adjust something so that I can make these 2 months work. So I'd have to go back in here and say, well, you know what, we're going to push off something, or make sure we don't spend as much money, and try and figure out how we can manage that cash flow. So I set this up at the beginning of the year. Now, the beginning of the year doesn't have to be January. Okay, for me, my crucial month is April. So my beginning of the year is usually May, right? I'll change the months at the top here. I can change that, and I will start with May and end in April. Because if I can, have a positive cash flow at the end of April, that's what my goal is. So it doesn't have to be January to December. Whatever is, where's your crunch month? You maybe make that the very last one. So I'll start, and I will plan this out. It's a projection, right? I'm trying to, once I get it all filled in, I'm projecting what we're going to be. Then it takes me a few hours to get it set up, to get it planned out. And then on a monthly basis, now I have to monitor it and I have to adjust it. Let's say we're at the end of January, and end of January, I'm supposed to have in my bank account, which I've predicted in my projection, $9,149. Okay. Let's say I only have 5,000. Ooh, that's going to make a big difference. I go back up and look in April, or sorry, and this one is January. I look in January. Why am I out? What didn't happen that was supposed to happen? So I compare my cash flow with my actual bank account. Okay, why am I not where I'm at? I figure that out, and maybe it's just that I guessed wrong, right? Some of these numbers we guessed wrong. We had an extra expense. We had, a major repair or something. That's fine, right? Figure it out. And then what I do, because this is a formula, this 9149 is the formula to this 9149. Okay. Figure out what the mistake is and adjust it. And then I change this number here to my new bank balance. So let's say I only have 5,000 in my account. That's a formula, but that's the only formula that you can write over in this spreadsheet. So I write over it. Did you notice it changed everything forward? Okay. But what that does by erasing that formula right there is I got rid of January. Anything in January now no longer affects the rest of the page. Okay, so now I have a new actual of February. Oops, that's not what I want. This new actual in February is now a new projection of everything else. So what I'll do is I'll save this whole file, January cash flow 2021. And then when I adjust after January, once February hits, I adjust it, I redo it, and now I've got a new projection. Then I'll save it as a file, February 2021 cash flow. So now I have the old one still as a projection, but now I have my new one as an actual with a projection ahead. And the same thing happens in March. Okay, March, our bank account doesn't look the same at the end of February. What's wrong? Oh, maybe it's up this time. Okay, so oh good, it's at 12,000 now. So I figure out why, or what's the problem, adjust anything I need to, and then I change that new balance. And now I save it as March 2021 cash flow. Now I have two old projections and one actual moving forward, right? So this just keeps adjusting as you go. Really handy that way. But remember that you keep erasing that formula. When you go to next year's, you either have to put that formula back in, or I would suggest starting with a brand new cash flow. Go get the original again and start inputting things again, because you have erased those formulas. So all the way down here, it'll just keep changing your projection all the time. The other thing that could change is, let's say you did your projections for revenue in January, and you come to May when the animals are coming in, or whatever your profit center is. In this example, it's grazing. Let's say instead of the 400 head that we had projected, they only brought us 350, right? They shortchanged you on animals. So you just change this 350, it changes all my grazing revenues, which transports all the way back to this page under grazing revenues. It just adjusted all this, okay, just by changing that one number. So that's the advantage of being able to change it. If I did all those calculations on a piece of paper and then inputted this August for $25,000, if they change the numbers on me, I'd have to go back and try and figure that all out and redo that whole thing. So it's worth your time to make these extra worksheets because it really speeds things up, because you can just adjust. Okay, well, maybe they brought you 450 instead. Okay, well, maybe with 450, we're not going to be there as long, right? They overstocked me. So maybe I'll come in and instead of grazing September for 30 days, because my formula says E4 times 30, maybe I'll change that to 15 days because we'll kick them out a little bit earlier because we're overstocked a little bit. That's my projection, right? We're not going to know until we get there. But once we're in September, then we'll know how long we have, and maybe we get another month. So you can, add that in here. Oh, we'll get another month. Let's add some more in October. And then that changes our projections. Okay, so it's a pretty powerful tool. There's lots to it, but it's really simple once you get into it. And like I said, it takes me a couple hours to set it up, and maybe 20 minutes to monitor it every month, or maybe every second month. If you get to the point where you're comfortable and you're not in a cash flow crunch all the time, maybe you don't have to do it every month, right? Maybe you can slow down and check on it once in a while. But when I first got started, boy, this was a pretty important tool, because we were, battling cash flow was our biggest issue, trying to get through some months. So pretty powerful tool. Anybody got any questions on that while we're on the page?
I have a question on the grazing tab, and I'm sure this will be the same for the others. So like under May on the first one, it's like 5062.5. How are you calculating that? Okay,
so let's follow through that. So grazing, there's 450 head.
Yep.
At 75 cents a day, which calculates to 337.5 per day.
Mm-hmm.
And then what this formula is, I'm just going to click on it. The formula is E4, which is this 337.50 times 15 days. Okay. If you want to just type in the value yourself there, that's fine. But I like to make it easy for me. I just do everything with a formula.
So you're assuming that you're going to be there for 15 days?
Normally I start grazing May 15th.
Okay.
So if we come into May and my cattle are starting to arrive, but they don't show up till the 20th, I can very simply go in here and just change this to 10 days or 11 days. May has 31, right? So I could change that.
And then June is 30 days.
Yeah, June is E4 times 30.
Okay.
So July would be 31 and August would be 31. Okay. Now if you don't want to have a formula there, you can just, figure out the number quick and throw it up there. But that way, because I have such a complex grazing system, right? There's all these different herds coming in and different owners, and some are feeding, some are grazing. This makes it a lot simpler for me, right? I look at one pasture. Okay, this is the money. There's 39,000 coming in from them. When is it coming in?
Mm-hmm.
So,
okay. That was my question.
Okay.
Thanks.
Now, on one of these, or a couple of these, I have a bit of a cheat. Let's do the cattle sales one because there's something in it already. Let's delete this. Let's figure out, we've decided that we're going to sell these 700 weight steers, 250 of them. We don't know when we're going to sell them, but we're hoping we're going to get this 140,000. On this page, I've got a bit of a calculator already built in here for you. So it'll automatically put everything as sold on January, right? When you type in total value, there's a formula here that automatically makes it all on January. So if I throw in, let's say I'm going to sell $100,000 in May, it automatically subtracts what I have left. There's 40,000 left. Okay, so now I know, okay, I've got some more to sell. There's 40,000 there. Now it's zero. So If you don't sell anything in January, then that needs to end up being 0 at the end. So I've kind of built in a calculator so you don't actually have to have the calculator in front of you. Maybe you wanted to do 20,000. Okay, now I know I got a mistake because it's negative. So we got to go 20,000, right? You can change whatever, as long as this ends up being 0, it kind of does the calculations for you. I think that's the same in crop sales. Yeah, so I've got this formula already built in here. If you were to build, so let's say we got 2 bales an acre. Same thing here. Let's say we're going to sell this in September, 12,800. Okay, just makes it so I don't have to use a calculator. It's already built in for you. Now, one of the things I mentioned earlier, but I'll show it here. This helps me manage my cash flow. Okay, this is my rent page. This is one of my biggest expenses as a custom grazer. If I'm going to get new landowners coming in, okay, I got somebody else that offered me a piece of land, you know, let's say it's $5,000. I can go back and look at my cash flow here now that I have this set up and say, which month can I negotiate? Okay, I told you April's my brokest month. I don't want to be paying rent in April. I'd love to, you know, go June, July, or later. And according to this right now, August to September are the lowest when I'm paying rent. Okay, so I'm going to try and negotiate with the landowner and say, can I pay you in August? Okay, that's, you know, I'm on a cash flow business. If I can pay you in August, that'd be great. If they say, no, I want some money up front, well, then I'll say, well, can I pay you some in April, right? Can I give you, let's say we've got a new piece of land here. Let's pay you $1,000 in April, and I'll give you the balance in September, right? And that tries to balance out my cash flow, tries to keep them happy. I know this business is about human resources and this business is about trust. Okay, so I'm trying to balance my cash flow, but I also have to build trust up with my landowners. Most of them that come in as new landowners, they don't know me yet. I haven't built up that trust yet. So a lot of them want it in April or May. So I try and keep my May as low as possible. So let's say that I've been with this landowner, this $2,700 for a while. So I'll go in and chit chat with them, have coffee with them and say, so, you know, we've been working together for quite a while. You know, I pay my bills. Is it possible that I could move my payment to July? Okay, because I've built up that trust with them. And majority of the time, they're like, yeah, no problem. That's fine. You know, we've got a good relationship. So I'll bump that to July. Okay, what that does is frees me up some space in May or even April, because the next landowner that I get that's new, we don't have that relationship, and chances are they're going to want their money up front. Right? So over time, as I get more, you know, build that relationship with my landowners, I try and move them later. Right? I'll try and get landowners and move them into August and September and maybe even October. Some of my landowners now, this one in particular here, I can pay whenever. Right? They don't have a set time. So sometimes I pay them in November even. So that gives me some flexibility on my cash flow if I can build up those relationships. Remember at the very beginning of this, I told you human resources is my, you know, most important part of my business, right? That's what kind of dictates everything else. Yeah, that's, you know, I go for a lot of tea and cookies, I tell you. That's important. So yeah, I can try and manage my cash flow, and the easiest way for me is through my rent. You can do it through your crop sales and cattle sales too, right? If all of a sudden you need some, you know, you got a shortfall in September, well, maybe you might have to sell those steers in August, right? But you can predict that 6 months in advance. So you better already be looking for that. You know what, I got a payment to make in August. I better sell some animals ahead of time to make sure I can make that payment. So really helps with your balancing your finances by running one of these. Okay, any other questions? There's no way that was clear as mud. Or maybe it was mud.
We have a question in the chat here, Steve from Kent. Where would be a good place to add an inflation factor for the ever increasing expenses be? Is there a category for fidgeting future developments?
So what I do for that inflation factor is when I'm setting this up in the springtime on my costs. Like I said, if I go look at my accountants from last year and they say that my fuel and oil was 15,000, I might throw it at 16,000 this year, right? There's my inflation. I'm assuming that it's going to be higher. So let's say we'll go with, like I said, if I want to do it across the board, if I did $800, what does that make it? Copy it across 9. We need to be more. So, but I know my fuel and oil is going to be higher in June. Let's go 1500 and copy that across 13. What were we at before? Can't remember what we were at, but I can easily inflate that, right? And you're, like I said, you're better off to aim too high, because I love that mistake when there's more money in my account at the end, right? If it's not near as stressful when you get to the bottom here and you're supposed to have $8,849 in your account and you have 12,000. Okay, that's a good surprise. I love those surprises. And the other part was, is there a category for fudgeting future developments? Fudgeting, is that like planning for future developments? I like that. We've got capital sales and new loans, right? If you've got something that you want to play with, first I would figure it out on my economics, definitely, and then start figuring out, okay, where can I plug that in? When are my payments, right? We've got payments down here, right? There's a truck payment, a loan payment, auto insurance, Blue Cross, credit cards, right? If you got a credit card that's up, right, you want to put a few $100s on it every month, you can easily throw that in there as well, for sure. I don't know if, did I answer that good enough?
Yeah, that makes sense. Thanks for the
Perfect.
answer. Another question, where would you add in an operating loan?
I missed that. It's already in here. Operating loan is right here, OL interest. So right now it's at 8%. If I had an operating loan, you can just change that to whatever your actual operating loan is. And this line right here shows what your operating loan is at. Okay, and it charges, it'll add in the interest for it. So let's make this worse. We're going to drop this down. Oh, I already changed this. I've got to put that, I'm going to put that formula back in just so this changes. Okay, so now my formulas are corrected. So if we go into the hole, we're going to start this at, let's say 5,000. How bad does that make us? Okay, if we're in the hole, you can see the interest. This one's in the hole, so we get charged $7.67 of interest on that negative bank account balance. This one's positive, so we didn't get charged the interest. This one's positive, we didn't. This one's negative, we did get charged interest. Okay, so it's the month later that you get charged that interest, and then so on. These ones we didn't. So your operating loan is already worked into this cash flow. Does that make sense?
You betcha.
Okay, something else that was on here. I have a double check. I'm just going to move my page over here. If you ever, because most of the formulas are going to be locked on here, but like I said, there's that one stretch that is locked, or maybe there's, the page protection's not quite right. I adjust and adapt these all the times. There is a possibility that I missed a square and you can accidentally change a formula. I hope not, but it is possible. Here's a double check. This 455,587 and this 455,587. If those two numbers are different, there's something out of whack, because this one adds up this whole column going up, and this number adds up this whole column going across. Okay, so if somewhere in there a formula is messed up, these two numbers will be different. Okay, so that's a double check. Same with up here. There's a double check. As long as those two numbers are the same, then the formulas are all accurate. It's just something else to look for. When I did this by hand originally, that was in there. You made sure you added them up to make sure you didn't screw something up when you're adding with a calculator. So hopefully that's not an issue with this, because the computer does all the calculations for you, but it is still in there. I still have it there as a backup just in case.
Okay. So Lynn had put in some suggestions for accounting software by the looks of it. So thank you for that, Lynn. There's some good resources in there. Lynn's coming through with all of the resources on this course. I love it. And then tips for cash flow on a prospective business when you don't have all the numbers as concrete as you would like. How would you deal with that, Steve?
Oh, your best guesstimations, talk to somebody, Yeah, the first little bit is kind of chaos. I think we talked about last year about, or yesterday about how franchises are the most successful businesses, right? Because they've already done all the numbers, they've already figured all that out. When someone starts up a new business, they're starting from scratch and they don't have all that figured out. So that's why, you know, after 10 years, 80% of small businesses fail because they don't. So tips, get it as close as you can, talk to people, ask for help. Getting that financial advisor was a big step forward for me, right? To be able to just call him up and say, hey, what's with this, or can I do this, or that was a big advantage. I actually thought back then that the fact that the beginner farmer loan and this financial management program that was offered by the government, I thought those should have been linked. Now I linked them, like I did them both at the same time because I thought it was a good idea. But that would have been a great idea to have them linked, that to get the beginner farmer loan, you have to go through this program and have this financial advisor with you. That'd be a great option for some young people, right? To get their head wrapped around it, because majority of people, you come out of college, right? They don't realize that economics and finances are two different things. There's so many people that don't realize it. They just think it's money. So.
Alrighty, we got a couple questions here looking for clarification on some of your cash in, specifically on what exactly is underwater basket weaving.
Yeah, that's just for entertainment. Yeah, and a widget, whatever widgets you're trying to sell. Yeah, I had to put something funny in there. I think originally, like this is a really old one. I think mine says 2011 or something on here. 2008, even older. I have my schools and my seminars, and I was back then in the wintertime, I was driving a truck, right? So I might have other income coming in too. So that the trucking would probably come in through the personal page though. So we'd switch to this personal page and have some income coming in, other income, right? So maybe for the winter, I go out and get a job and I'm bringing in $2,500 a month. Whoops, not 25,000 would be nice. Okay, and then I can go across. Maybe I did it here too. Right, real easy to add that in till April. There, now I got a winter job. Simple as that. Now we're looking pretty good personal. But then of course, if I went out and got a winter job, my wife would want to go to like probably Jamaica, and that would probably be a $12,000 trip, right? Like, yeah. So it's really easy to do some projections here, right? Can you afford that holiday? Okay, how much money can we bring out of the business, right? Personal wages, can we bump that up? You know what? Maybe we're doing pretty well here. Let's see what our bank accounts look at. Maybe after May, we can put our wages up. Where's the wages? Okay, we just gave ourselves a raise. Let's go 5,000 a month. Okay, that automatically switches to my personal page. And now we're doing much better. This is really good. I wish that was what we did every year. Anyway, we've messed with this quite a bit. But yeah, you can see how that all changed. Okay, now we can take a $120,000 holiday. Woo! Oh, sorry, that's not the holiday. That's why it's not changing. I'm putting in the wrong part. The vacation's down here. There we go. There's our $12,000 vacation. 120. Yeah, now we're broke. So we can't afford the $120,000 vacation. Sorry, dear. Let's do 12,000 instead. Okay, we can get away with that one. Okay, so we'll meet you guys in Jamaica. That work?
Okay, we have another question in the chat about why a big legal and accounting expense in July. I'm assuming that's just when you pay your accountant.
Yeah, where are we at here? Like I said, I've messed with this so much, it's not really real anymore.
Mm-hmm.
Yeah, accounting. I'm a limited company, so accounting automatically gets higher, right? I mean, when I switched from a sole proprietorship, I would get maybe a $1,500 accounting bill. As soon as I switched to being a corporation, it jumped up to $4,000. So it's just the nature of the business. I think the advice I got from my financial advisor is if your business brings in over $300,000 a year, at that point, it's worth being a limited company. If you're under that, the accounting bill is too high, you don't get the benefits out of it. So there's other reasons why you might do it, legal reasons, but yeah, that, I guess that's where that came from. I'm a limited company.
On the subject of limited companies and stuff, this is just something that I thought of. If someone is looking to incorporate, do you have any insight on year ends or any opinions there for picking a year end?
Year end. We actually had this discussion last year. I was actually sponsored by a company called FBC, Farm Business Consultants, and I did some talks around Canada. And quite often this discussion came up, and it was pretty popular. Now I probably should have paid attention more, but I'm already a limited company. I still think it's simpler to have a year end of December 31st because it doesn't mess with your personal, right? It jives with your personal income tax, because I have to do my business income tax and my personal now. The other company that I owned previous to this one, the year end was March 31st. And I always got mixed up. The accountants know that. They can figure it out. It's quite simple. But I would always get kind of confused when it came to, when my income was coming in or when we would declare it in and when it wouldn't. So personally, I still want December 31st, but a lot of accountants will purposely want to pick another month so that they're not so busy, right? They want to spread out their workload as well. So they might try and urge you to go in August or July because they're not busy then. But if it works for you, great. If not, yeah, sometimes it's worth it to keep your accountant happy too, right? That human resources part.
Okay, if there's any more questions, please either unmute yourself and we can have a discussion, or pop them in the chat.
I can actually show people how to build another page here too. Let's say you had another type of crop sales. So I would go down here and right click this button, and I would say move or copy. I'm going to go move or copy. I'm going to say create a copy, and I'm going to move it to the end and hit OK. Okay, so now I have a crop sales too. Now I can change this. I can go in here and say rename. Let's call this basket weaving. How about underwater basket weaving? How about, there we go. Okay, so now I have a new, a whole new spreadsheet. So I can go through here and make my underwater basket weaving, make it all add up. Let's make something add up here. Where are we at? Okay, we still have 1280. Let's say, obviously we would change this, baskets. Get rid of those. We would change number. Let's just go number instead of number of acres. I'm just going to put that there. Price, we're going to sell them for $500 a piece. I'm going to get rid of that. And we need a number of them. We're going to sell 50 of them. Okay, there's 25,000. Now we're going to sell them evenly. Let's say, are we 2,000? I'm just guessing here, trying to do the math in my head. We're 3,000 short. So let's say before Christmas, we're going to sell extra. So we're going to sell 5,000 in Christmas. There we go. So let's go 4,000. So we sold some in January too. Okay, so that leaves me $1,000 in January, and then that's when everything's sold. So there's that 25,000 going in. So now I'm going to copy these ones right here. Those ones I need to put into my business page. So underwater basket weaving, I'm going to go equals. I'm going to hit the equals sign. Where is it? There it is. And I'm going to go to that page and click on January. Okay, so that adds that formula, and then I hit this little check mark, and that takes that $1,000 to there. Now I've done it once, I can cheat and again grab that little tab, pull it across, and it brought all those across. Okay, so now my underwater basket weaving, I just inputted here. So we've got that 4,000 at the end, so it was different. And if I come in here and as I'm moving along and I found out that, you know what, I need to make more, or I sold more at a different time, let's say we didn't have as many sales in June or July, but we ended up having extra at the end. Maybe we sold some extra in November as well. Okay, so we've got 1,000, 2,000, 2,000, 1,000. Okay, so that goes back and it's automatically all updated because we put those formulas in. Okay, so now you got to be careful, the ones that you've put formulas in, that you don't accidentally erase those, because those are all formulas. All my formulas are locked, but your new formulas won't be. So you just got to keep an eye out for that. And that's where this might come in. Keep an eye on this so that it doesn't change. If you've accidentally gone in here and deleted this, okay, now we've got, oh, that one deleted at both places. But anyway, you can keep an eye on that. If we type this one in at 3, yeah. Anyway, we'll undo that so we get that formula back. You get my point, though. We got to keep an eye on that to make sure things aren't out of whack all the time.
I have a question.
Yep.
We have an on-farm butcher shop.
Okay.
So would this go on the business tab, or would this have its own tab?
If it's more complicated than adding a couple of numbers together, I would make its own tab, right? So instead of underwater basket weaving, we could make this the butcher shop.
Okay.
And how you put it together, right? You can start from scratch and build it yourself, right? I've got a couple of these templates. Will this one work for you? Maybe not, right? But really, you can start a brand new tab, sheet 2, and start from scratch.
Okay.
Okay, you can draw your own picture, and then again, just link the answer on the monthly answer back to your main page.
Okay.
That's
you.
the key. Like everything on this page will calculate itself. The only way you can get it to the business page is for you to make that formula and copy that across, right? Like we did right here. We copied all these ones across to the months.
Okay. All right. Thank you.
You bet. Okay, how's chat doing? I'm gonna go look at it. Anything?
Nothing new in the chat.
Okay, well, people are getting fried out. I know this is boring stuff.
Especially after our wild Friday night last night.
Hey, Steve, maybe just show folks how to lock and unlock those cells so that they can not lose their formulas by accident.
Okay, that would be a good idea, except I don't think they can because it's already locked. The reason I keep it locked is so that you can't change the formulas. And the other reason is because if somebody finds a mistake, I don't want them to just fix it. I want them to send it to contact me and tell me there's a mistake. I don't know if they can, but if you build your own, maybe on the new sheet they can.
Yeah, if you go on the new sheet, it should be under, I can't remember whether it's under data review. Can't remember what's the top of my head.
Review is protection.
It's under review. And what you would do is you would select your cells that you want to be able to edit, and you right click them, and you're going to click format cells, and then it's over on the what is it, give me a second. If you go format cells, it will be over on the protection tab, and you want to unlock it. And then once you unlock it, then you go over to your review tab and you click protect sheet, and you don't even have to put a password in. You can just leave it unpassword. And then usually the select lock cells and select unlock cells will be checked, and you don't need to check anything else, and you just hit OK and it will lock it. And then you can just unlock it if you want to make a change, and then lock it again once you are done making your changes.
So that will work on your new page, but you won't
Yeah,
be
on
able
your
to
new
do that.
sheet.
Yeah, we won't be able to do that on these ones because I have all these locked, right? I really don't want to give you an unlocked formula, because what will happen is you will, I know human nature, we want to do things easy.
It's
So if we,
so easy to wreck formulas.
yeah, and what we'll do is we'll accidentally erase a formula or forget that it's a formula and just type in the number instead of actually going to the other spot to change it. And then what we'll do is next year, because we're, human nature, we're lazy, we don't want to type all this stuff in again. So we'll just use the same sheet and we'll do it next year, right? So then that same error gets moved to the second year and the third year and the fourth year. So that's why I recommend to you always start with a new cash flow. Don't use last year's, and just in case there's something that's out of whack. It makes you think through and make sure you rethink some of these expenses too. So
Hey, Steve, on the spreadsheet calculators that you provided for us to download, are the locked cells password protected, or can those of us who are comfortable with Excel get in and change it to our liking?
I've got it locked, but like I said, if you want to change it, by all means, I can send you the password, but I want you to tell me if there's a mistake. That's why I don't give out the password. It's not that I'm trying to protect this thing. You can share it all you want, but I want people to tell me if they find a mistake, which I haven't had too many people tell me lately, but it also is a way for me to tell if people are actually using this, because they phone me or they message me and tell me that they found an error, which is good because then they're actually using it. So yes, my answer is, if you really want to play with this, you can send me a message and I'll give you the password.
Okay, thank you.
And just a note on that, I know I've got it open in just in Google Sheets and it's not locked there. But
I had that problem before when they took this and converted it to a Mac formula too, right? Because you lose all the protection. So that's the risk, right? Like I said, I'm not trying to protect this. Like, I'm giving it to you for free. I'm not trying to, keep my property rights, because I actually originally stole this anyway. I just don't want it to be screwed up and then have your numbers all messed up. That's all. So if it does unlock, be very careful. Like, double check, make sure you can't change all these things. The only things you should be able to change is everything in white. Anything that's colored, you shouldn't be able to change. Not quite, because these ones you shouldn't be able to change either.
If you make it into like a Google spreadsheet document, you can, like for anybody who's doing it, you can set locks on it though, but I think you're right that it doesn't automatically transfer the lock, but you can add it.
Okay, so that's my advice to you then. Right away, lock everything that's a formula. If it unlocks itself, just do it. It's very frustrating when down the road and all of a sudden you realize that a bunch of the formulas have been accidentally erased. Same with that other calculator that we gave out yesterday. If it unlocks, then you can screw up some of those formulas too. So double check to make sure they're locked when you first get them. All right, well, if nobody else has got questions about the cash flow, I can stop my share and we can discuss some other things if you guys want for a little while. If anybody has questions about yesterday, the gross margin, or whatever else you guys want to discuss, I'm open to change topics. I purposely wanted to leave some time for questions here today because I do have to leave right at 5 o'clock today. I've got my daughter's big drama production at the school tonight, so we've got to get going for that. But thanks, Jolene. I cheated. I stole it from somebody and then I tried to make it better. So I think it was originally called, this is probably 20 years ago, called the rolling cash flow forecaster or something like that, but it didn't roll, right? The mechanism, when I brought it to my computer, it didn't work the way it was supposed to. It was supposed to drop off 1 month and then add another month automatically every time so it was this rolling forecaster, and it didn't work at all. So I deleted all those fancy stuff that wasn't working, and I just basically, it started with a basic spreadsheet, and then I added the extra pages. It was only 1 page, so I added the extra spreadsheets at the bottom. Oh, Janelle has a question about subsidies. I bet PCBFA would have an answer to that one.
I do actually. So in, I don't believe you're in Alberta, are you, Janelle? Yeah, so in Alberta, we have what they're calling the Canadian Agriculture Partnership Program, where farmers can apply for grants here in Alberta. Unfortunately, I am not very fluent with programs outside of Alberta, but I know in Canada, the Canadian Agriculture Partnership is a Canada-wide initiative. So if you are in Canada, you can just Google Canadian Agriculture Partnership followed by your province. And usually the first hit on Google is your province's CAP program. And typically Canada-wide, there are producer programs available. Everywhere from like here in Alberta, we have grants for farm technology, sensors, farm security, that kind of thing. But they go as far as like off-farm watering system or off-site watering systems rather, corrals, some of the business management stuff that Steve talked about earlier. So that is definitely where I would say be your first look. Outside of Canada, I honestly have no idea.
The farm security one piqued my interest. I saw that the other day. So they'll fund half the security cameras and motion sensors or vehicle, GPS trackers or something. So that's interesting because farm, I think we're doing better than we were 6 months ago, but farm, whatever crime is crazy because they know that there's only, 2 cops in a county that are on duty at night. So they got a good hour, even if it's reported, they got a good hour before anybody even shows up. So, and all the criminals seem to know that. So yeah, rural crime is a major problem. So calving cameras?
No, unfortunately, they are not eligible.
Could be a security for your barn. I actually had one. I got it off the internet, so it was a cheapo off brand name from China or something, but it was this little camera that I could get. It would lead back to my phone and I could actually move the camera with my phone. So I could look over here and I could look over there, and it was really cool. And it recorded a 24/7 for up to 7 days. And I think it was $5 a month or something. But it went and froze up on me and died on me. And now I don't know what the company was again. There's nothing written on it. So I don't know how to get it back. So it broke on me, but it was really handy. It didn't notify me like it was supposed to. That was the downside, but it was really handy to be able to go to the shop. And because I don't live where my farm is, we live somewhere elsewhere. I can keep an eye on things at the shop. So I could double check the temperature inside. I could double check if the furnace was running. Our shop is off grid, so I could turn it and look at the inverter to see if it was running properly from anywhere. Right? I'm in Ontario, and I can check to make sure the furnace is still running in my shop. So that was pretty handy.
There's a question in the chat. After listening to PCBFA's podcast the other day about goats, I was thinking about diversification and how well do goats and cows play and live together?
Joanna, you're the goat gal. You're now the goat gal.
Only sort of.
Awesome.
Yeah, I know the goat gal. I know they have very similar mineral requirements, which probably helpful, but other than that, I don't have a lot of experience with goats. Steve, do you know anything about it?
Oh, you're gonna make me be the goat guy? Okay.
Yep.
I don't have a lot of experience with goats, but goats will work really well with cattle because they're not competing for the same forage. Goats are browsers, whereas cattle are grazers. If you've got a lot of shrubs and weeds or brushes or whatever out there, then goats love that stuff. They're not gonna. You can probably insert, I don't know, a 20% or 30% goats into your herd of cows and not even change your carrying capacity because they're eating a different thing. Whereas if you put sheep in, well, now they're both grazers. They're both going to be competing for the grass and the legume. So yeah, they would match. The problem I have, I'd love to put goats out, but is the fencing and sheep and everything else, right? I've got rented land. I'm not going to put $30,000 into a page wire fence around the perimeter of a piece of land that I could lose. So that's my my downside for that. I'd love to put more goats. I'd love to be the goat guy, because if I ever buy in another herd, I don't think it'll be a cattle herd. It would probably be a goat herd. So technically right now I own 3 goats because I invested with one of my employees and bought him some more goats. So technically I own 3, maybe 4. Maybe I get one of the offspring now this year too. So yeah, it was more just to support him than anything else. But yeah, the other issue that I learned years ago about goats is they're very homebound. right? They like their barn. Their little barn is security. When I was trying to do a rotational grazing system with my goats, as long as we were close to the barn, it worked great. And I could keep them in with a 2-wire electric. But as soon as I tried getting further away and take them away from their barn, right? It's summertime, it's good. They can go out there. No, they were going through fences like crazy because they wanted to get back to their barn. So the key to that I found is to have a mobile barn, right? That's their security. You know, small herds, they need that security. So a stock trailer is their barn, right? Just move the stock trailer when you move them, and kind of like my pigs. I do I call it like the flower petal grazing. If you've got your little home, whatever it is, for the pigs it's a cage, for the goats it would be a stock trailer, and then you can use electric netting or 2-wire electric if you've got your goats trained to it, and then you make little paddocks off of that home base, right? So it looks like a flower petal. That home base is in the middle, and you can make a paddock here and a paddock here and a paddock there, and then when you're done, you move the whole system over 200 yards and you do it again, right? Another set of flower petals. So that might be a way to move goats around too. And then that barn's always moving with them. I've never had this many, so don't quote me if I'm wrong, but once you get over about 75 to 100 goats, then they start feeling more secure as a herd. This is what another goat guy told me. And then you might be able to graze them as a herd, and maybe they'll stay with the cattle, right? The cattle will be their protection, and maybe you don't need the barn. But I haven't actually got to that point, so something to try. But yeah, definitely having that portable barn for them is a huge benefit for the goats.
Okay, we got another question here in the chat that we discussed last night, but Steve never gave us his perspective. Cattle per acres, and how often are your moves, and what are your paddock sizes?
Okay, so that is a difficult question to answer. That's why I probably didn't answer it. It all is different. Okay, I have all different types of land, different pastures, different productions. Okay, my bush pastures, right? They don't produce near as much as my tame pastures, which may be my native rough, kind of native pasture. It's hard to say native pasture here because native in my area is bush, right? If this land is cleared, it's been bulldozed. We're a gray wooded soil in this area. So native pasture to me it was bulldozed 50 years ago, and this is what came up. Okay, so it's not a true native, but that's my term for it. And then some of the better land that's been cultivated, maybe it's been seeded down to tame, but I know none of mine I've worked up in, as long as I've had it. So it varies so much. I'm going to go with a rule of thumb. Okay, in my environment, I won't include the bush, take the bush out of it, and I will go with a yearling per open acre is my guesstimate at a stock density. Okay, so if I have a 1,000-acre piece and there's 600 acres of it that's open land and 400 acres of bush, well, then I'm going to go with a 600, 700-pound yearlings. That's my bet. Now, if I'm just taking over this piece of land, I might go down a little bit. Let's drop to 500. Or if it's really good producing land and I know it's going to do well, maybe I bump it up a little bit. But that's kind of my starting point. And then the bush is extra security because there's not a lot of growth in that bush. It's my drought management, right? In a drought year, we'll have that bush as extra. I usually still graze it in a season, but let's not plan to need it is my goal. So how often do I move, and the size of my paddocks? The size of my paddocks don't matter as much. That's one question that I always have to stop people on. It doesn't matter the size of the paddocks. It's the number of paddocks that's more important. Okay, I said yesterday that my minimum number of paddocks in a grazing cell is 16. Now I have more than that on all mine, but that would be a minimum to me. So if you had a quarter section at 160 acres and I needed 16 paddocks, they would all be 10 acres in size. But if our whole cell is 640 acres, so that would be a section, now I've got 16 paddocks in there. Every paddock will be 40 acres in size. Okay, and if we get bigger, if we had 16 quarters, right? If we had a pasture, a large pasture, we had 16 quarters. If every one of them was perimeter fenced, I wouldn't need any cross fences, right? I've got my paddock, so each one would be 160 acres. Okay, the size of the herd just changes with the size of the pasture. So my moves, depending on the herd, am I using yearlings? Is it bred heifers? Is it cow-calf pairs? Are the calves big or are they little? Okay, so I'm going to change my management depending on the animals for some of it. The yearlings need decent gains, right? My customers want them to gain, so they're going to have to eat high quality stuff all the time. So I'm going to move a little faster, maybe try and get 2, maybe 3 rotations out of it. Whereas if we got those brand new baby calves out there, I don't want to be moving every day or twice a day, right? Those calves need time to get moving, and you don't want them to lose mom. Got to move them nice and slow and gentle, and maybe move every 3 days. Right, so there's some days I might be managing for the land, some days I might be managing for the animal, and some days I might be managing for the people. Okay, maybe I want to go on a vacation and go away for 4 days. Well, I can open up 2 paddocks together and give them 4 days worth. Right, it's not going to kill the pasture. So we've got different reasons why we manage it. I think one of our tools in grazing is change. We can adjust and manage differently according to the situation at the time.
Okay, so then a bit of a follow-up on that, Steve. You said like your minimum is 16, and how does that relate to your resting time?
So the graze period and rest period have to work together. Okay, picture it as little hay fields. Okay, if you wanted to make some hay, you would let that hay crop grow up, let it get to late stage 2 growth. So we don't want it to get too mature, or there's no value in it, right? So let it grow up and get fairly mature. You'd come in with a hay bine and cut it, probably all in one day, and then you would harvest it off, and then you would let it grow again. Okay, and it would let it grow up as much as you can, get it to that late stage 2 again, and cut it again. That's what I'm trying to do with my grazing, but I just have a whole bunch of little hay fields, right? I can't park my equipment in a shed for 3 months and wait for it to grow. So because they have to eat every day. So I have a little hay field, I let it go, I let it grow, and I knock it down in one day with grazing, and then we move to the next one and the next one and the next one. So that's all we're trying to do, is that same idea, but as an added benefit, we also get better stock density, and we get the manure and the urine, the nutrient recycling, like way better than making hay, because we've got all those other benefits as well. So that number 16 is kind of that management. Let's say we had only 8 paddocks. So if I wanted to manage my graze period and my rest period, one of them is going to be affected. So let's say I want, we didn't really teach a grazing school here today, but I'll try my best at this one without all the background. If we want my graze period to be short, let's say only 3 days, now we've got 3 days in 8 paddocks, right? So that's only 24 days. And we're back onto the first paddock already again. Okay, so that's not a long enough rest period. So let's manage those 8 paddocks for the rest period. Then we need let's say we need a 60-day rest period. Well, now I got to stay on those paddocks, 8 paddocks for 20 days each or something like that. I'm not doing math in my head. I'm just guessing. So somebody can correct me. I don't care. Now you're on each paddock for 20 days. Okay, now we're too long on there. We're overgrazing the graze period. So short answer is we need enough paddocks to be able to keep your graze period short enough so that you're not overgrazing, but also keep your rest period long enough so that the plants have plenty of time to recover. And that's where my magic number 16 comes in.
Okay. If there's any more questions or discussion we want to have, either unmute yourself or pop it in the chat.
Steve, an economics question. If you were to stack enterprises in the same acreage, whether it be rented or your own acres that you're paying rent for, how would you do that from, again, an economic side on the gross margin?
So each of the profit centers would be independent, right? We would still keep them independent on a piece of paper. What would divide out would be your land rent, right? You might be able to divide it out a little bit, and your labor and equipment costs. Okay, so if I'm managing that, when we did our calculation yesterday, we said that it was going to take us 45 minutes to drive down there, check the cows, move them, check the water, and drive back. Okay, that was 45 minutes. If I have my pigs down there too, well, now it's going to take me a little bit longer. But now I'm checking the cows and the pigs. So we save on the drive time, right? Because you could divide that in half, or in, maybe a percentage, 10% for the pigs and 90% for the cows, whatever you think is fair. But that's where we're going to save, is now we're layering those profit centers. We're going to save on labor and equipment costs, right? And you could charge I charge the pigs a little bit for land rent, even though the cows come through there and graze it, right? It's pretty small amount when you really look at it, but you could easily add that in. What else on cash flow what can I pose at them?
Sort of a side question. Did you have experience with livestock when you got started?
I grew up on a farm. My experience with my most memorable experience with a livestock was me about probably 8 years old, carrying 2 5-gallon pails out to feed the cows some grain, and the bull kept sticking his head in the pail to eat it before I got to the trough, right? And I'm barely tall enough to keep them off the ground, and this 3,000-pound bull sticking his nose in the pail, and I would get so mad at him, I would turn around and I would punch him right in the forehead. And then I'd get about 10 more steps and he'd have his nose in it again, and I would turn around and I'd punch him right in the forehead. And I'd eventually make it to the trough to dump those pails in. So yeah, I would say I had some experience with livestock when I was a kid. We fed pigs. That was our job every morning, to go out and feed the pigs or do whatever. I remember every Christmas morning, the animals all got fed before we got to open our stockings. So yeah, I grew up on a farm in Saskatchewan. I told my parents that story about the bull years later, and my mom just about died that she couldn't believe that they let me go out there at that age and feeding that big bull. He was a bit of a baby though. Lynn, did you ask that question because you're getting into this, or you've had experience, or?
I've had very little experience. I would really love to get into it in the next year, but I don't know if it will happen.
What kind of animals?
I want to get into cattle, and if I can, it's easier to fence for cattle, but I would like to get into it with sheep as well. But it's currently not. I live in town right now. Right now, I'm learning as much as I can beforehand, but around where we are, we could afford like a 6 or 10 acre place maybe, and then we could go 2 hours away and afford a place of 80 to 160 acres, but then you don't have the outside work to support you as you're getting started, which is the difficult part.
I've heard for quite a few years that the gateway drug to farming is chickens. So most people get chickens and they think that's pretty cool and they like their chickens, and then all of a sudden a couple sheep show up, and then maybe some goats, and then all of a sudden a cow and a donkey. So that those chickens are that gateway drug. They're usually pretty easy, and if something goes wrong, couple of chickens
cheap to
die.
Replace.
Yeah, it's not a huge risk to jump into, right? If you got 50 chickens, right, just to get your feet wet, build a little portable cage. My wife actually built one years ago by herself. That was her little project, and she built this little portable, they call it a chicken tractor, to haul around. It was pretty cheap, maybe a couple $100, and she built it. And then we had this little cage to move around, and it's a good way to start. You don't need very much land, just enough to be able to move that cage around.
Yeah, I'm hoping we could get somebody selling their yard site, and then a 6 acre, 10 acre yard site, and then as you get a little bit of experience, talk to them about leasing out that rest of that 80 acres or quarter section that they kept.
You know what? Where are you located?
I'm in Leduc.
Okay. You know what? There are so many little pieces of land not being used. Okay, so drive around the countryside, get something close. There'll be a grain farmer where there's a little gully or a little piece here, and all of a sudden they just can't get to it. Or there's a yard that's on that land that now it's subdivided out. So somebody has the yard and somebody has the grain land, and nobody uses the yard. Okay, little pieces are a pain in the butt to everybody else. So if you want to get started, drive around and find some of those little pieces and go talk to people and say, hey, can I give you $300 and let me use that land? And there's so much of it not being used. Like I drive down here, for me, they're too small. right? For my
Yeah.
operation, I'm looking for quarter sections and sections together. But if you just want to do chickens and sheep, there's a lot of those little pieces.
Yeah, I would love to like get into geese, although they are bigger. I think I would start with chickens because, you know, smaller poultry. I mean, they're very different, but they're still birds and they're smaller. But the reason why I was thinking about geese is because they're mainly grazers. So I am trying to get more, I want to move away from like grain type things so that and not mining for grain, mining land for grain, but grain also can be used to in good ways. So
Yeah, we still use grain for our pigs, right? We're just
yeah,
trying to figure out how to get grain growing in a regenerative manner, right? Instead of in the old, you know, the modern monoculture. Geese, my only experience is with ducks, right? So that's a step up from chickens. I'm going to tell you right now, ducks are about 10 times messier than chickens.
oh yeah,
Oh yeah, there's poop everywhere. They spill their water. It's just constantly clean when they're little, just constantly cleaning up. We had 50 chickens with
Mhm.
4 ducks, and the ducks were way more work.
Yeah. Like, I don't know if you ever watch YouTube stuff. I watched this guy called Goldsaw Farms, and he started out with ducks and he moved to geese, and then he actually got chickens because he's allergic to duck eggs. He started his enterprise with like selling duck eggs, but he ended up being allergic to them. So, but he said like he finds that the geese are easier than the ducks
Maybe
and
yeah.
cleaner.
Ducks
So-
are really dirty too. We just for fun one year we got 7 ducks for our little dugout out in front of our house. Right, we thought it would be cute just to have the ducks out there, and they're dirty. Like that dugout, like it's not a very big dugout, but only 7 ducks. It was filthy. The water was not clean. It was like, yeah, they're messy. You need a big body of water if you're going to have ducks.
Yeah.
They are cute. I love the synchronized ducking. It's a new Olympic sport. So
yeah, and I think the other negative with like both geese and ducks is that their feathers, they're so much more difficult to butcher.
Mhm.
So like with ducks, or say with chickens, you can butcher them and you put them in the plucker, automatic plucker, and it plucks them really easily. And then with ducks and geese, you have to time it to the exact date, like so many exact days after they were hatched, and then they're still more difficult, more time.
anybody
So,
have any experience with that? Anybody
at
ever
least,
tried
at
to
least that's what I've seen, read. I don't actually have the experience with that, but
Yeah.
I want to get the experience. So
Yeah, maybe somebody here does. So if anybody has any comments.
So Lynn, yeah, Lynn, I'm friends with someone who's doing heritage geese. So they probably have got a lot of input for you that you need. So hit me up on a message, and I'll get your information over to them to reach out to them.
Alrighty, so it's getting close to 5, and I know Steve has to run at 5, but we have one more question in the chat that might be interesting. What is the best start out electric fence setup for a small herd?
Oh, best start out. It honestly doesn't matter. Usually they're 6 of one, half dozen the other. Are we talking small herd of what, right? Cattle, sheep. I mean, I've got electric netting for my pigs. I've found the shorter stuff to be easier to get over. The poultry stuff is taller because you don't want the birds to fly over, but they still do, by the way. They fly over it really easily, actually. But for the pigs, I want the shorter stuff because then I can step over it without zapping myself in a spot that doesn't want to get zapped.
Yeah.
And for electric fencers, I like a 3-jewel fencer. I like StayFix or SpeedRite. They're actually the same company, just different color. They come with a 12-volt adapter and a 110-volt adapter, so you can plug them into a wall, or you can hook them up to a battery. You just change the cords. But a 3-jewel is nice because I can move it around and I need 1 ground rod. You get any bigger than that, you're going to need more ground rods, and they're not as mobile. And I like to have a mobile system, and a 12-volt battery to go with it, and a solar panel that I can kind of build them myself. A solar panel I add on, depending on how many joules, for every joule, I need 10 watts of solar panel in my environment, in Alberta, Canada up here. So for example, a 3 joule fencer, I will need at least a 30 watt solar panel to keep it charged. And then in the wintertime, we start losing daylight here in Canada. So I will increase my solar wattage then, right? Maybe come September, I'll grab another 20 watt or a 30 watt solar panel and I'll throw it on, just to make sure that we get a little bit more charging on that battery. Because yeah, it'll come down to September sometime, you get shorter day lengths and all of a sudden your battery's dead. So
Yeah. And how about for cows?
that's mostly for cows, the same
Okay.
thing, right? I'm using the same size. You might want a little bit bigger fencer for your page wire because it's going, or your electric netting, because it's got a lot more touch in the ground and more shortage. But also for my pigs, I don't need it that hot, because if anybody's ever seen a pig on electric netting, it doesn't take much and they think the world is over. Like it just, they scream and cry and you feel so bad when a pig gets hit. But when a cow gets hit, you're like kind of snicker at it, because I don't know why, but those poor piggies, they just like the world is ended when they get touched by that. So yeah, I purposely don't want it real strong for the pigs. I'll short it out on purpose if it's too big. So
Awesome. I think that's all our questions.
all right,
Hannah?
close her
Yeah.
out.
Thanks everybody for coming out. Thanks Steve for presenting, and we'll talk to you next week.
Awesome. Thank you guys. See you later.